gentlemen of the crypto space. We're live on a Monday, October 20th at 11:32 a.m. And we're looking at a very lovely chart in my opinion. So what we see on the chart is about 2 years worth of Bitcoin price activity, 2025 and 2024, obviously. But what's fascinating is how short short of memory folks have, and the market has zero memory. Now, there's something that was very obvious that folks don't talk about anymore, but it was literally 5 minutes ago, was this. This was 2024. And I remember social media like it was yesterday, the tone, the talk of the town. It felt like forever. If Bitcoin was just going horizontal, it was doing nothing. We still had Gensler at the SEC. And this was when the ETFs finally got approved. And Bitcoin was at 47,000. And the second the ETFs launched, they crashed to 40,000. And 2024 was just a weird year of nobody knew what the hell was going on, what was playing out. It was all still a very malicious overtone from an administration perspective, hostile overtone. So enduring 2024 gives us a great deal of context, a great deal of information that should guide us in how we should feel about 2025. Now, bear in mind, this concept of context and historical context brings us back even further. So we don't need to go too far back, as depending on how much experience you have with these markets, we go back a long time. And we've told stories about 2020, 2021, and compared to 2019. So we don't have to go that far back for at least this story. So I guess the whole point that I wanted to open with today was 2024 felt like forever. And now we're in 2025. That's a completely different tone, a completely different mood. The feeling in the air is very different. And obviously, from a technical structure, it is just visually different. What is this? Lower highs? One, two, three into September. We had lower highs and whatever. And also, I guess, lower lows. Like maybe this is a descending, broadening wedge of some kind. And then the administration flipped the switch and it broke that lower high, lower low sequence to the upside. And then everyone screamed at $107,000. It was all over. Double top. Bear in mind, this is 1 month apart. You got to understand, this is 1 month apart. Look at that. Peak to peak, or wick to wick, tweezy top to tweezy top. That was 1 month. A whole month, everyone was like, all right, we're up there at 108. This is it. This is a blow off top. It fell down to 89 and then all the way back up, and it just got rejected at 109. Everyone thought it was over, and things fell apart down to $74,000. So the beginning of 2025 was very interesting, especially in the context of 2024. Now, we're at basically the end of 2025. So we have even more context because not only do we have 2024, we have the beginning of 2025 that I just described with this rejection at this level. So this is a new level. This is a breakout. This is setting a new level. Imagine the sentiment folks had. This didn't exist yet. None of that existed yet. Everyone had no context to go on. But now we're here at the end of 2025 in the purple rectangle, and we have this double top that we saw at the beginning of 25 as our historical context. What were we feeling back then? What were we feeling back in 2024? And clearly, in the summer of 2025, we also have that as context. And that was constructive because we broke out to the upside. But we did have rejections. So this is properly covered as a green rectangle, I would say. The majority of this interaction with this 108 level that was set back at the beginning of 2025 was rejections. One, two, three, four, 5, 6 weeks of rejections, and finally a break to the upside. But it's not a super duper big break. It's not like the breakout we had from 65 to 108. Is that even a measured move? That's okay. Stop drawing. It's bigger than a measured move. This is well, maybe this is the whole flagpole. Maybe this was the whole flagpole of sorts, and I guess this might be the measured move. Maybe, maybe. But there was no context to go on. Like this is a nice move down here from 75 to where we are right about now at about 110,697. So properly drawn as a green rectangle, the vast majority of that interaction during summer of 25 was resistance, but it is clearly a flip of resistance into support. That is just clear as day, in my opinion. Nobody, nobody back at the beginning of 2025 wanted to buy Bitcoin at $109,000. Nobody. And they started selling. They sold it all the way down to 89. And then, woof, all of a sudden, a little jolt of energy in the market started buying all the way up to 100 and 109.1. But nobody wanted to buy at 109.5. In fact, so many people didn't want to buy, they started selling. And they drove it all the way down to 90 and then further down all the way to 74. Nobody wanted to buy higher than this level right here. That's what a resistance level is. And it took us how long? How long did it take us to get back to retest? It took us a solid 119 days. No sneeze, no sneeze, sneeze. So it took us 119 days to retest that level once again, ladies and gentlemen. And then not only did it take us 119 days to retest that level, it took us 168 days after this second top to finally punch through that 109.5 that I was talking about earlier, that no one wanted to buy. Nobody wanted to buy higher than that level. And all of a sudden, people started buying above that level. And then we had consolidation up here. And let's not go back about a month. A month is too short term because there's no consolidation here. That was just literally basically a bearish engulfing on the monthly. Not really. Yeah. No, not really. Not even a bearish engulfing on the monthly. This is even the monthly is constructive. I mean, Bitcoin just looks lovely. It's firing on all cylinders. The technicals from a weekly and a monthly perspective look constructive, positive, bullish, dare I say, even. So we're in Perpy Circuit territory. Perpy now Perpy rectangly. Why? Why? Nobody wanted to buy above that level. People started buying above that level, and all of a sudden, now people won't even sell below that level. That is the point of a resistance flip support. Nobody wants to sell below 108,343. Nobody's selling below that level. So where it was a level that nobody wanted to buy above, all of a sudden, nobody wants to sell below it. And that's a narrative change, ladies and gentlemen. That is called the resistance flip support and is one of the most constructive expressions that technical data can tell us about the collective market. And clearly it works in reverse. Support flip resistance. One of the most meaningful indications of bullishness and bearishness. Resistance flip support and support flip resistance. So thus far, obviously, with 1 week in hindsight, we had an interaction with this. I think this is drawn as the 40 SMA. I've modified it. Thought it was the 10. Oh no, don't delete. I want it to be the 10, but I'm going to keep it as the 40 for now. 40 on the weekly. That was almost tick for tick. You see that? Isn't that wild? That's almost a tick for tick interaction. Wild where that wick lines up to a moving average, the average price of Bitcoin for 40 weeks, taking a sample of 40 weeks of Bitcoin data, tick for tick. MAs are wild like that. So a mean regression on a relatively short-term MA for me is quite constructive. And it's a relatively short-term MA in my opinion, because a weekly 50, a weekly 40, what have you. You guys know me by now. I'm looking at the monthly charts. I'm looking at the yearly charts. I'm looking at the 3-year charts. Not on Bitcoin, but I'm just saying. Weekly chart is probably as low as I go. You get so much noise down here on the daily. Look at all this above and below. I don't, and look, here's the, what are these? What is that green? Is that the 200? Did I really modify this like that? I got to double check my MAs. I think I made a mess. No. Yeah. Two, is that the 200? No way. I got to check my MAs. Anyway, but look at that interaction around the green one, which is apparently the 200 daily. What the hell? 400, 800? Did I really do this? I guess I did. I made a mess of my MAs. I'm gonna have to reset that. But suffice it to say, with the picture as drawn, look at that interaction around this particular MA, and it's congestion, but it's just too noisy. Whereas this is just so incredibly clean cut. So to top it all off, from a weekly standpoint, so you have that congestion as we just saw in the daily, congestion, as we just saw in the daily, clean cut with a wick. It didn't even break below the MA. So that's an expression of support on a relatively short time frame MA. So that's constructively bullish in my opinion. Not even in my opinion, that's just objectively bullish. In comparison, compared to the most previous interaction with this MA and the further previous, it is constructively bullish. Okay, so Bitcoin sets the tone, tells us what the hell we should feel, how we should smell, or what we smell about the market, whether we smell bullshit or we smell roses and pancakes in the morning and French toast and maple syrup and bacon. And to me, today is probably a decent, a decent egg whites, some yellow American cheese, and maybe some sautéed onions. It's a nice day. This isn't like maple syrup and waffles day. Now, maple syrup and waffles day is where this thing ripped to 130 already. This is a maple syrup and waffles kind of day in the morning. So right about now, because support is an expression of weakness, and as I often say it, this is a decent egg whites and sautéed onions, and which is a good day. So it's definitely better than if we were bearish. We don't have a bearish day. It's not bearish in my opinion. Constructively bullish. Curve could look prettier. It is printing a higher low. This was an outsized move to the downside. Um, in my opinion, it doesn't overwhelmingly break trend because I don't like trends too much. I like moving averages and levels. So from a level standpoint, the candle body closes are indeed a higher low. MAs were shot on the MAs, so there's nothing really constructive to talk about on the MAs on the weekly. There's a bit to talk about on the daily, so there's some constructive interaction there. But it's a mess with this giant wick to the downside. One heck of a liquidation event. Centralized exchanges and liquidity providers made an absolute mess of things, a glorious mess of things. But I do like it from a level standpoint. At least the closes are a higher low. So if you go on like a line chart, that is exactly what you'll see. If you get rid of that, you'll see higher low, higher low, higher low. Line charts only track candle body closes. Nice chart to look at to give us the temperature of the market is AVE, and the fact that AVE was caught up in this liquidation event this past Friday um, is par for the course because this is basically your bedrock of crypto banking. Um, and in some regards, this is just big noise, high or low. You blow off bottom, April 2025, and then this is a higher low at about 218, 115, 218. I don't know. It looks great to me. I like this chart. I like this chart very much. Not really a cup and handle. That is way too low for it to be the handle. Handles should be about 50% of the move from trough to peak on the cup. This is way too low. So this is just a very volatile asset where shit is trying to figure itself out. Macro is pretty constructive today. We were moving down on the DXY. We're still below the weekly 100. Move indicator still hovering around 80. Still haven't seen a measured move to the downside. Nice measured move would probably take us into the 60s and the 50s, albeit there's been a lot of congestion pretty much all year since May, since these large peaks to the upside, which are just something is breaking for these kinds of large peaks. So this relatively reasonably paced decline in volatility, we should see a nice move to the downside where volatility is quelled because of market dynamics, organic market dynamics, and artificial market interventions. You know what else stands out to me today? Oil. $56 a barrel. I mean, if gas price is not $2.50 in your neighborhood, first off, you got some sort of socialist government going on because they're throwing taxes and taxes and taxes or whatever, refining surcharges. And because oil is dirt cheap, there's absolutely no reason for gas to not be cheap. The local price for gas in Florida is dirt cheap, and I can only imagine in certain parts of um, Texas and whatnot. Um, I what's it at in California? Fucking shit. I don't know who still lives out there paying foreign change dollars. I don't even know gas prices. I drive an electric car, and I'm probably talking on things I shouldn't be talking about, being critical of things I shouldn't be critical about. But the point is, oil is dirt cheap, and when oil is dirt cheap, is a condition where markets tend to be very bullish. Oil weighs on everything because without oil, you don't have fuel. Without fuel, you don't run operations. And a lot of economics is really geared around a forward looking indicator or a forward looking inspection on availability of energy. I mean, the real currency is energy. Haven't we talked about things like that? And Groman sure as hell has. And Michael Saylor talks about it too in a very esoteric kind of way. Um, But if energy is cheap, that frees up a tremendous amount of capital for a whole lot of speculation and a whole lot of investment purposes. And it is the case right now that energy is quite cheap. Gold on an absolute tear back up to 43.50. We speculated that last week's relatively decent sized candle was a blow off top. It is not thus far. This thing is cruising right back to the top of that wick. Was that a shooting star? It clearly was not. If we breach that top and we get over 4,400, absolutely wild to see this price action. This is like a meme coin in so many regards. What has this global economy become? What have these governments done? They've done everything wrong. That is the truth. And we see that in the economic data. And governments, the only thing, I'm very restrained and very careful when I talk about politics. And I want to remind folks we have a decent sized audience today, 185 people, that the only truth about politics is that it's us, the people, versus the government. The second you start thinking of left and right, you're kind of wrong. Why? And I'll give a good example. With the Biden administration, they were very negative on crypto, so they had negative regulations. With the Trump administration, they're very positive on crypto, so they have positive regulations. Hey, guess what, fuckers? No regulations. Get the hell out of the way of the people and what they want to do. Now, you could have law enforcement, but I'm not a fan of regulations. I'm a fan of free market economics. And the market should do what the market's going to do. And people should engage in financial activity. And people should take their own responsibility into their own hands. And people should do their own due diligence. And law enforcement, as I said, is another story. But that's not regulations. The threat of law enforcement is always quite reasonable. And that's kind of should be applied uniformly, Republican or Democrat. So that's the biggest lie that people believe, that this general public lives their lives around. Left versus right. It's not. It's not right versus left, or vice versa, or what have you, or whatever artificial construct you may believe. It's us versus the government. Because no matter what, the government is taking your money and giving it to someone else because they think they could do with your money something better than you could do with your money. And that's fucked up. Who doesn't donate? I donate plenty of good causes. I don't want to donate to other people that I don't know. I'll donate to people that I do know. Guess what? When I go on my animal donation websites and I see an animal and I want to donate to an animal to help that animal, I help that animal. If you go on Children's International and there's some child that needs help, I want to donate to that child. If I want to donate to a family health insurance, let me know the family and I'll donate health insurance maybe. Or if I want to give some food to a needy family, please let me know what family I could donate to, like a Children's International type of presentation, and great, I'll probably donate. The second the government says, just give me 30% of your fucking money, oh, that's when it got bad. And that's where we're at. So I won't dwell on it too much. I don't talk politics, but anyone who thinks in terms of left and right is missing the entire point. They're both the same. All government needs to get out of our way, the people's way. They have no right to take from us, and they do. And it's truly a shame. And I wish more people saw that. I see so much horrible things on social media. People defending their ideas and their positions of who's right and who's wrong, and they're literally just completely off base. And they'll never, no one will ever say it. They just won't. And we're just going to continue down this path. And whatever. Anyway, I digress. Okay, Aerodrome back at 85 cents. Lovely Aerodrome. The Dromes, who um, some nice commentary this morning. I wonder what's going to happen with the giant outage with Amazon experiencing what it's experiencing, and Solana and Base having hiccups. Come back to that whole decentralization type argument, and whatever. Base is still going to be Base because of Coinbase, and Solana is a beast of beast because if you look at the currency supply, it's through the roof. So I think it changes nothing if they have network instability. That's why you have Ethereum. Okay, that's why you have mainnet, and that's why you have things like Linea, which are really damn close to mainnet, but they're still not mainnet. And you clearly have Arbitrum, which is a network of networks, and Optimism, which is a super chain. So we have things of different levels of awesomeness. Where do you want to put the levels of awesomeness? I'd probably put Optimism right up there at the highest level of awesomeness, just because of the super chain and what Velodrome has built for it. Capacity to swap chain to chain through Optimism is insane. And Linnea with the consensus narrative, that's pretty incredible. And Arbitrum basically has a very comparable narrative to optimism. It's just that maybe optimism has more legs. But look, Arbitrum has more liquidity. Optimism has less liquidity. There's all these pros and cons will drive yourself nuts. It's all incredible tech, wild tech. Okay, I like the market. Well, what's the title of the stream? That it's always simpler, and you guys know that's something that I always reiterate to you. Remind everyone that it's always simpler than people think. Panicking and selling because it's all over. How many polls do I do where I ask people, is it over? And this sure as hell doesn't look over. In fact, it looks kind of lovely to me. Commentary time, ladies and gentlemen. Fugu, good morning, Cap. Much pleasure. Arrow, hello. Delphat, good morning. Good day to you, Lucian. Always a pleasure. Rupert, good morning. Bub, Rob reposted the stream. I appreciate you. The Hook, Peter, Dean, Patrick. Hey, Cap, Total 3 looks prime, but your rules have been invaluable for maintaining emotions for me. I'm less focused on euphoria, more focused on owning a business that pays me sustainably. I thank you very much for such opinion. And I remind everyone that I'm not here to make as much money as possible. And that is maybe um, surprising or not contradictory, but just counterintuitive to most people. I'm here to have a sustainable capital management methodology that allows me to manage my money rationally and allows me to sleep at night. Now, if I was leverage long 10x and I had to make sure that I was properly collateralized and could I sleep at night? If I could lose, if I had $100,000 leverage long 10x, would I be able to sleep at night? Or if I owned a bunch of meme coins, what happens if I don't sell them and the market tanks? Could I sleep at night? Y- what I do for my portfolio is probably what a lot of people do for their portfolios nowadays. But what's most important is that everyone individually does for themselves, individually, what they need to do to sleep well at night. That's your signpost, ladies and gentlemen. That's your guiding light, your North Star, your source of truth. Because if you could sleep at night, you could let time pass. And these markets reward people that spend time in the market. All you have to do is survive and own more assets, preferably assets that pay you. Now, once the assets pay you and you figure out that part of the equation, and that's a hard part of the equation. I mean, most folks you've been listening a long time, Patrick, as well as many other people in this community. Um, but most folks struggle with that concept of owning more assets. Ooh, cash flow assets. Ooh, I have a small portfolio. Maybe that's not good for cash flow. It's a hard equation for people to figure out. And then I make it even more complicated, unfortunately, because I tell everyone once they figure that out, then it's their fiduciary obligation to optimize tax treatment. Because once you get the cash flow, you're just going to give all this shit to the government so they could give it to someone else that you don't even know? Oh, hell no. The next absolute financial, fiscal, fiduciary, self fiduciary responsibility of all of us is to optimize the crap out of tax liabilities. Because tax avoidance, is completely reasonable, completely legal, completely expected. And that's something we've discussed in overwhelming detail at times. Good stuff, Patrick. Keep it calm, keep it cool. And that's how we survive and that's how we win. Eric, market has given us some good opportunities to execute rule number one the past month. Now we're talking. That is a very reasonable and appreciated statement, Eric. Very minimal leverage, not neglecting the cash position. Market should reward us. Patience, young grasshopper. That is such a lovely post. I appreciate that very much. Minimal leverage, great, sustainable. You're not taking excess risk. You're not going to lose assets. Assets depreciate, assets reappreciate. That's why I was looking forward so much to yield basis. That's a great place. Impermanent loss. What a promise, or what a concept if the promise is fulfilled. And I think it may be. I think someone finally figured out impermanent loss. And the flywheel could be quite attractive for yield basis. Very exciting. Not neglecting the cash position. If you don't neglect the cash position, you got cash, and you're not a forced seller. A forced seller is someone that has too much leverage and they're forced to liquidate their position, or someone who is worried the price, they only have Bitcoin and it's down below 108, and they're worried and scared, and they're forced to they force themselves to sell the dollars because they don't have enough dollars, and they're like, oh, I need some dollars, I don't want to lose any more dollars. Well, if you had 10 grand worth of Bitcoin and 5 grand worth of cash, you have the 5 grand worth of cash. You clearly don't need the cash. You have 5 grand. So you're not forced to sell your Bitcoin to have some dollars. So not neglecting the cash position affords you the capacity to not have to sell to have cash. It's a psychological thing, because if you open up a portfolio viewer, whatever, DBank, so on and so forth, and you see no spendable cash, like I can't buy any assets, I can't go put some money on a debit card and go to a supermarket. It's a very different feeling than if you have cash available. And folks, if you're thinking about net worth and you're looking at the top number on DBank, that is another thing that needs to be cured, because that is very unfortunate. That is plague, a burden, a problem. You're not going to sleep at night looking at total net worth. Doesn't work like that. It's not going to get you to where you want to be. Igor, much a pleasure. Hello, Noah. Jeff from Eurodollar said dumping oil is deflation and represents lack of economic activity. Very bad, he said. He's spot on. A lot of how he talks is complicated to fully digest, but that is as clear as day. If oil is dumping, that is deflationary. um, he usually sees through the noise. So what does that mean? If that's deflationary, okay, the system is in dire need of inflation. Now that presents a great deal of complexity, because the general public doesn't understand that inflation. We need currency supply inflation to generate financial activity. And what does the system need? It needs that kind of inflation without consumer price inflation. So can that happen? Sure. Clearly, we got some deflation in real estate as well, over leveraged all over the place. That's another story. But can the system get the inflation it needs, the currency supply inflation, without overflowing too much into consumer price inflation? And that's the art of threading the needle that these mega financial planners at the central banks really want to do. They want to thread that needle and get the inflation they want without the inflation they don't want. And that brings us back to macro talk, where it's imperative to understand what type of inflation you're talking about. Oh, is that a rabbit hole unto itself? What type of inflation? Very different types. Very significant, the different types of inflation. Good stuff, Igor. Gold up, oil down are signs of huge deflationary risk. Yes, I would say the deflation in gold is a forward-looking indicator on the system being primed for currency inflation. So gold is responding to the deflation because the deflation is smelling out the system needing currency supply inflation. The reason they need the currency supply inflation is because the global debt burden and the monthly servicing requirements are going to need servicing. So the system must inflate. Otherwise, the debts don't get paid and none of it works. There literally isn't enough dollars in existence to pay off the amount of debt in existence. And that may seem weird to many people, but that is an absolutely true statement. H&T, Brent Johnson, thank you very much. Good stuff, Igor, yet again. John Steps, good morning, Cap. Any thoughts on YB price? Looks juicy. Curve still bigger. Well, my 2 cents is anything that's downstream from Curve is a sacrificial token in some regards. What does that mean? I think all roads lead through Curve. I think whatever people see as the inflation of Curve is relatively trivial, meaning if 100% of all tokens got locked, I think I would get diluted like 50%. So that's not a very scary notion considering where I think the amount of revenue that my position is going to generate is going to go. So I'm not afraid of that dilution. I'm not afraid of Curve's economics. And I think it's my favorite position. It's my largest position. And I think it's going to be the best position that achieves what I want to achieve financially. And I think anything that's downstream from that ultimately is indirectly going to finance the success of the base layer. And that's the whole point of a federation, or that's the net result of a federation. A federation picks the central point of focus, and that central point of focus becomes the lifeblood, the essence of the federation. The federation is really this self-emergent organization where third-party actors all contribute to this, central organized purpose, and that's what Curve has become. As became it a long time ago. How many downstream protocols are there that have accumulated Curve? Voting power, governance rights, and gauge voting. Okay, so what's on deck? Yield basis is a new token. Why? Because now they have an additional capacity to finance liquidity depth through vote rentals through VLCVX or VECRV, vote rentals or direct bribing. I don't think we're going to see too much of that. I think it would probably still be quite more efficient to go through Votium or Vote Market to get the best bang for the buck. But I bet my bottom dollar we're going to see a lot of yield basis YB tokens going through there to finance liquidity depth because that is ultimately one of the biggest businesses in crypto, liquidity financing. And guess what? It's a brand new token. It just launched last week. So that means got a fresh economic model that needs dilution. It's disinflationary, just like the Curve model, but now it's going to go through its hyperinflationary decay. What the Curve looks like, and it's going to be used to finance liquidity depth, which in turn will boost its price, which will in turn will get the flywheel going for CRV's price. And as CRV's price gets cooking, that changes the entire equation. Then it just gets weird because as Curve goes up in price, there goes Convex, because now it's just increasingly more capital efficient to vote through Convex, and that goes back and forth with capital efficiency voting for VCRV, and you get a seesaw between the two venues of vote rentals. And then yield basis not only has its allocation of supply to Curve, which is going to be used for vote rentals and liquidity financing, but it also has its emissions. So this is going to get all kinds of weird, in my opinion, as the market evolves in the coming months. Um, I will probably be accumulating yield basis. I got some yield basis because of my Curve governance votes, and I'll probably carve out a piece of vote rentals to whatever is incentivized by uh, YB to accumulate there a piece, meaning probably like what 25%. That sounds good, and the 75% remains cash flow. I like that. I'm still thinking about that. I'm not inclined to just uh, it'll be weird though if you're getting like a 30%, because right now you're talking like 12% APR on vote rentals. If yield basis starts to do weird things and price action starts to do weird things, and the APRs on vote rentals go up and to the right, I don't know. All bets are off, and you got to make different decisions as the market changes. Dean, well said on the left versus right. It's all a facade, and they manipulate the general public. Absolutely incredible and horrible simultaneously. What a shame, because that's all we see on TV, right? on the media. We see these protests this over the weekend, and then we see more protests, and then we see all this defensiveness and offensiveness, and people killing each other. What the fuck? What's the, people are so angry. People need to sit in saunas more. They need to sit. They need to exercise more and sit in the sun and be fit and focus on health and well-being and mindfulness and consideration. And that has nothing to do with the left versus the right. It's maybe like what I would say like a monk, but I guess there's a religious overtone to a monk. But it's just mindfulness, which is maybe like a spirituality. Spirituality really doesn't have anything to do with religion, although it's very easy to say it does. But it's really just being in touch with whatever the hell is inside of you. It's an interesting statement, but you got to figure out who you are. If you know who you are, you can behave well. If you can behave well for yourself, you can behave well for other people, and that's what makes a great society. And unfortunately, right now we got a pretty gross society on average. It's pretty gross out there, guys and girls. Pretty bad. Not gonna lie. Eric, Cap, you ever been part of markets where the press making a post can move markets as it appears nowadays? Not meant as a parsing question, just an observation. Um, well, listen, there was a time before the Fed's announcements where they didn't really move markets, or but then what happened was I forget which Fed governor introduced the idea of these market announcements. And the whole point of the market announcements was to jawbone the market. The announcements start to move the market. But then what happens is society gets conditioned to look for the Fed's announcements to see where the market moves. And now you have a correlation. Ooh, look at, Fed print to go burr, QE, interest rate cuts, market go up. That's the wrong conditioning. But the general public is conditioned to think that interest rate cuts and QE send the market higher. And that's what they wanted. They did that on purpose. And that's kind of what the administration is doing as well. But the last administration did it as well. They did it less overtly, but it was there. Every political administration has done this. It's just that folks didn't see it. Politicians talking affects people's perception. And when people are perceiving something, it's going to affect their behavior. If a politician says one name of a company, there it goes. So, yeah, this is kind of par for the course, maybe a little bit more overt now than ever. Um, but I'm not too surprised, and I don't see it. It's probably bad in many regards. Obviously, our economics is perverted beyond um, recovery. There's no coming back from this. Uh, as I said, and probably the best thing I could say is it's gross. But that doesn't mean we can't manage capital in a non-gross and reasonable yet rational way. Now that some time has passed, thoughts on Rex 33 versus XREX. I have not opted for Rex 33 yet, primarily because I do not want a liquid position in my portfolio. If I have a liquid position, then I have to manage basis. That annoys the crap out of me. So I over the last month, because I've talked about this, converting to Rex 33, so I could sell at the top. Um, I'm leaning on just retaining the XREX as a locks position and still getting the cash flow. And like just in time when I'm trying to liquidate, all right, I liquidate, I take a haircut and it'll be whatever it's going to be. Um, I don't want to just sit with XREX in the portfolio because I don't want the accounting. I'm telling you at this point, I literally do things because I for optimal accounting because accounting is the most annoying thing you'll do with capital management. Now, almost everything I've done is to simplify accounting, to optimize taxes. It's such a burden with this government. And it's not this administration. The concept of the United States government is a fucking bird, and what they've done to the people. It's disgusting. So everything, so much of everything that I've done is completely centered around accounting and taxes and management and optimization thereof. So I've opted thus far since our last conversation about this topic to literally do nothing since the last time we talked about it. Cash on chain versus cash in a bank. Ah, okay. I actually am more comfortable nowadays and for quite some time with cash on chain from a risk standpoint. Probably equal amount of risk, meaning stablecoins are liabilities of someone, either a bank deposit with like Circle, USDC, or a collateralized debt position with Tether, or like an on-chain liability with Curve, and then that has, yeah, in fact, actually, a fair amount of my stables are CRVUSD denominated at this point, so my comfort level has increased significantly. But I'm much more comfortable with stablecoins as compared to bank deposits. I'm just so cynical at this point. Unfortunately, I hate the banks. I hate our government. Even the politicians that are cool, like what Ted Kennedy, who he always with the one-liners and the quick jabs, and he's always just so witty about everything. I still I hate the concept of a politician. I can't. It's gross. So I hate the concept of banks. I hate the concept of the status quo. I wish for new, and that's why I love these crypto markets so much because it's a new concept. It's a self-sovereign concept. I can manage my own capital. I could go to Aave for banking. Why the hell am I going to HSBC for banking when I could go to Aave for banking? A bank, and Aave's a damn bank. What is it, the 36th largest bank in the United States? Yeah, check this out. Aave is the 38th largest bank in the United States. Remember that, ladies and gentlemen, the next time someone asks you who's your bank, because if Aave is your bank and you have dollars on Optimism and you use Spritz Finance, which everyone knows about at this point, you could take your dollars on Optimism, USDC on Optimism, and put it on a debit card in 15 minutes. Or nowadays, I've been my next my next card of choice is Cipher because they did a VE implementation, so I've got a kick out of this. Um, so I like this product, but this is basically instant. You take USDC and you put it on this card, it is instantaneously, for all practical purposes, on the card. So Aave is your bank, and you put dollars on your card instantly. I don't know. That's cool, man. That's cool. That's a way to live. That's so much better than dealing with these boomer banks, old people, boards that make billions and options and whatever whatever disgusting corporate reality that we don't know about. I can't stand it. I want nothing to do with it. Looks like Gil Bezos may send berms to VLCVX2. Yeah, of course it will. So ultimately, from a capital efficiency standpoint, Burbs go to VLCVX or VECRV, and it cycles back and forth as we've seen historically. But guess what? If Burbs go to VLCVX, now that's going to garner some votes, and that'll adjust the amount of voting that goes on at the VECRV level. Because VLCVX is ultimately voting at the VECRV level, and that frees up additional revenue at the VECRV level. So everything affects everything. So if Burbs go over to VLCVX, I'm getting more revenue at the VECRV level, and everyone wins. That's why these crypto markets are so lovely. So much more potential than meat space and that old boomer corporate world they created. P2P, yes. Rule number one, buy more assets. Those who are buying gold and silver, Bitcoin, and various crypto businesses the last few years are up right now, and the businesses are still paying. Isn't that simple? Keep it simple, ladies and gentlemen. People make it too complicated. People are their own worst enemy. People want quick returns. They don't want to win over 10 years. Nobody wants to work for 10 years anymore. Meanwhile, I spent my 30s literally killing myself with work. I think I went through 10 different jobs in two different states to get to where I am, and people just want to get to where I am, and I'm not even at a place where a lot of people want to get to. So many people want to get like 10,000 times past me. I'm like, where the hell are you going? In all honesty, people want to have like all these millions of dollars and fly in private jets. No joke. What in God's name, or some less religious phrase that maybe pisses people off, so I'm sorry about that one. What could you possibly need more than like, what are you going to do with $20,000 a month, $30,000 a month after tax? What are you going to do with that kind of money? What the fuck are people looking for? You realize that's like 300 grand a year? What do people do with their money? What do people want so much money for? What the fuck? I don't get it. I really don't get it. Do yourselves a favor and find some humbleness. Y'all need some humble pie, and you can find happiness with much less money, ladies and gentlemen. Please find peace of mind. Be able to sleep at night. Cap, any thoughts on the 40 billion swap line with Argentina? Yeah, it's a bailout. Any useful macro information? Strictly political. Well, in the end, they have a lot of debt. In the end, debt tends to spiral. In the end, if any country that has U.S. debt doesn't get bailed out and they declare bankruptcy on that debt, someone's losing money, and that debt is probably used as collateral to back other debt. Of course, it is. So debt has a way of spiraling out of control, especially when it's leveraged, and dollar debt is highly leveraged. So my bet is the U.S. will probably try and bail out anyone that is having a sovereign currency crisis for reasons of self interest and survival. Any one of these, any nation, even a small nation, has a potential to create a massive ripple and massive knock-on effects that takes out a good part of global economic flow and momentum. That's my 2 cents. Our hearts are restless until they rest in thee. Is a nice quote. Coming in from left field, Bob Rob with a good quote. Ain't that true? Just use Aave. So true. So true. I feel the same way after 22. Debacle and DeFi survived. CeFi didn't. Even the banks collapse of 2023. So many folks don't realize how close we are to complete systemic failure, or how many times we've had complete systemic failure. And most people look back to like 2020, March of 2020, as the COVID crisis. What folks don't know about September of 2019, when the United States banking system failed, the repo crisis. But the repo crisis wasn't a repo crisis. That's when the United States banking system failed. And if the Federal Reserve didn't step in, it would have been an apocalypse of economic proportions. And that was in September of 2019, and nobody knew about it, all casual. Everything went on like nothing happened because the Fed came up with their repo operation, their standing repo facility. But that's what happened in September of 2019. Isn't it remarkable how people just go on with their daily lives having no idea what's going on around them? The more you know, the better decisions you can make, the more prepared you can be, the better person you are, and the better you could sleep at night. Good stuff, Peter. On-chain businesses are the most interesting thing in finance today. First off, you just said something that most people can't begin to process. On-chain businesses? This is something that most people don't understand, don't believe in, have no idea exists, and can't understand it even if they're told it directly. An on-chain business, on-chain. What the fuck is on-chain? A business in crypto? Ooh, crypto is just tokens, and you could just make a new Bitcoin. You can make as many Bitcoins as you want. You could copy Ethereum if you want. You could just make your own token, Noah token. You could do whatever you want. What are these businesses? What? You just blew people's minds. But all right, we've been talking about this for a couple of years. 5 businesses of crypto, ladies and gentlemen. Best businesses I've ever seen, in my opinion, because they take the human out of the equation. How about that? USDC interest on Aave is taxable, where Treasury MMAs don't have the same tax burden, though. Uh, yeah. So from an accounting standpoint, this is exactly why I don't deposit on Aave. Um, I can't stand those stupid calculations. I can't stand it. I mean, if I'm getting like 3% on what a couple of thousand, 20,000, I'm getting 3% on 100 grand. That's $3,000 a year. That's I almost I'm almost at the point where I'm like, I wouldn't even report that. I don't care. It's just such a stupid system of nickel and diming the shit out of everyone. Like if you got $3,000 interest on $100,000 position, and the United States government wants really what $1,000 of it, what a bunch of dicks! They're coming in from left field. Oh, I'll take that. Oh, I'll take that. Oh, that's for me. What a dick move. That's so petty, and I I can't. I don't even want to talk about taxes, right? That's just gross and petty, and uh, all they do is whatever. No, this is why I just remind folks it's in your best interest to use AI to build an organization and have that organization be fully aware and built around the laws and rules and regulations of such an organization to be as tax efficient and optimized as possible, because the fuckers in the government want to take your money and they're following the rules. You better spend your time and follow the rules to prevent them from taking your money as much as possible. What's the point of doing nothing? Why not spend every ounce of effort to do everything and anything you can to protect yourself from thieves? They're not asking for a donation. They didn't say, would you like to help someone else? Here's the family that you would like to help. Here's someone who had a medical issue, and would you like to help them? Because most people would like to help. No, they just said, give me your money and we're going to not tell you what we're going to do with it. That's fucked up. No, that's just fucked up. Also, the ease of moving money on chain versus traditional banking. Yeah, nowadays the list is enormous, enormous list of debit cards. I don't even know where to begin. On our Discord, which is extensive because we've had our Discord for years, 285 people on the stream, and none of you are on our Discord. There's a tremendous list of debit card products. There's also a tremendous history of very optimized business structure for superior accounting and tax management. So there's a tremendous amount of history on our Discord. Um, just saying, it's a hell of a Discord that we've dumped a huge amount of information over the years. It's so easy to go on chain and off chain nowadays. It just really is. Wow, what a bunch of dicks. Is it crazy? They're just a bunch of dicks. Oh, I'll take that. Crazy. Michael, can I ask what you do with your Aave tokens? They stake your Aave tokens. I don't do anything with them. I stake them. If you go into staking and you go to the safety module, you put in your Aave tokens and they go right here. Stake, total stake. Aave, simple as that. It doesn't pay much. It pays 3.5%, but I want Aave. Like I bought such a small position in Aave some time ago. I just threw it in there. I'm just gonna leave it in there. I don't really. It's not cash flow. It's only 3.5%. But Aave is Aave. It's a bank. It's the 38th largest bank in the United States, and basically a small cap or mid cap, I guess. There's like $4 billion market cap. It's literally less than a $4 billion market cap. Come on, this is a bank, ladies and gentlemen, the 38th largest bank in the United States. Why the hell isn't this like a $150 billion market cap? You got these stupid AI companies on the stock market running around at $100+ billion, and you got the 38th largest bank in the United States running around at $3.5 billion. What the fuck? Okay, so this is a lovely product at a hell of a price point. Why doesn't this run 50x on the money to $150 billion market cap? Okay, so because obviously Bitcoin needs to expand, Ethereum needs to expand. $150 billion market cap. If you're looking at the top 10, it would completely distort the entire picture. But the point is that tells you where we are. It tells you how under monetized this entire space is. And my general expectation is heading into 2030. Um, this is going to be what the top 50 will be $100+ billion. That's my 2 cents. Top 100, 25 to $50+ billion. Right now, the top 100 is a little over $1 billion. All right, so the top 100 goes 25x on the money. The top 50 goes 50x on the money, and the top 20, you get that massive number, especially if you're coming from below top 100 to get up to the top 20. That's generally my expectation for the next 5 years. Gross, disgusting appreciation. Absolutely mind boggling. People are going to be like, what the hell just happened? Because things are going to start to be priced properly. Ave being priced at 3.5 billion is not being properly priced for what it is. Simple as that. And that's the case for so many assets in this space. That's the bottom line. Ladies and gentlemen, let's wrap it up for today, Monday, October 20th at 12:34 p.m. Thank you all for joining me today. 289 people made it to the end of the stream and are all now that much more rational because of it. I appreciate each and every one of you, and I wish you all a wonderful week. Please find your path of calm, your place of silence, your location of tranquility, be it in a sauna, be it in the gym, what have you. Get to sleep at 9, 9:30, 10 o'clock at night. Wake up at 5 o'clock in the morning, circadian rhythm type shit. You know, go to the next level. Treat yourself well, and then you can treat other people well. Enjoy your week. I will see you guys and gals at the end of the week. Until then, peace.